The future is now, and honestly, watching the Pentagon completely transform how they think about drone warfare feels like living in a sci-fi movie. RCAT Holdings just got caught in the middle of what might be the biggest military technology shift in decades, and the stock exploded over 27% as investors realized what this policy change actually means. This isn't financial advice, just my take on what looks like a genuine paradigm shift in defense spending and strategy. Yesterday, the Pentagon basically said screw the red tape and reclassified small drones under 55 pounds as consumables, like ammunition that you use and don't expect to get back. They want every military squad equipped with these by the end of 2026, starting with units in the Indo-Pacific region, which tells you exactly what kind of conflicts they're preparing for. The funding numbers are absolutely staggering. We're talking about $33 billion specifically earmarked for drones and autonomy in recent defense bills, with the Army alone requesting over $500 million just for counter-drone programs. This isn't some small pilot program or experimental funding. This is the Pentagon betting big that low-cost, expendable drones are going to fundamentally change how wars get fought. When you see that kind of policy shift combined with massive funding, it creates opportunities for companies positioned in this space that happen maybe once in a generation. The strategic implications of this shift are pretty mind-blowing when you really think about what's happening here. The Pentagon is essentially admitting that the future of warfare isn't about expensive, reusable platforms that take years to develop and deploy. It's about cheap, disposable systems that can be manufactured quickly and deployed at scale. This is a direct response to what we've seen in recent conflicts where small, inexpensive drones have proven incredibly effective against much more expensive traditional military assets. The military is realizing that a $50,000 drone that can take out a $5 million tank represents a fundamental shift in cost effectiveness that changes everything about how you plan and execute military operations. The emphasis on domestic manufacturing is also huge because it addresses one of the biggest vulnerabilities in current drone supply chains: dependence on foreign suppliers, particularly Chinese manufacturers who have dominated the commercial drone market for years. The Pentagon's push to build a robust American drone manufacturing base isn't just about national security. It's about creating an entire industrial ecosystem that can rapidly scale production when needed. This means companies like RCAT aren't just competing for individual contracts. They're positioning themselves to be part of a strategic industrial base that the government views as critical to national defense. The reclassification of small drones as consumables is particularly interesting because it removes a lot of the bureaucratic overhead that slows down procurement and deployment, allowing for much faster innovation cycles and more aggressive experimentation with new technologies and tactics. RCAT Holdings has managed to position itself pretty well in this spending wave through their Teal Drones subsidiary, but their track record has me both excited and nervous about their ability to execute at the scale this opportunity demands. They won the U.S. Army's Short-Range Reconnaissance Program contract, beating out competitors like Skydio, which is a huge deal because it makes them a key supplier of next-generation drone technology to the Army. This isn't just another contract win, it's validation that their technology meets the military standards for next-generation reconnaissance capabilities, which opens doors for future competitions and establishes them as a serious player in the defense drone space. They've also secured contracts with U.S. Customs and Border Protection worth $1.8 million for Teal 2 drone systems, plus additional orders from the Army National Guard and other government agencies, totaling over $500,000 for a dozen Edge 130 drones. The company even landed a $1 million contract for their Edge 130 Blue drones from the Army Communications Electronics Command, and they've partnered with eSero to scale up production with a made-in-America supply chain that aligns perfectly with the Pentagon's push to reduce dependence on foreign suppliers. What's particularly impressive about their contract wins is the diversity of applications, from reconnaissance to border security to communications support, which suggests their technology is flexible enough to meet different mission requirements. The partnership with ESA Aero is especially smart because it gives them access to AS9100 certified manufacturing capabilities, which is the aerospace industry gold standard and essential for scaling production to meet potential massive government orders. On paper, this looks like exactly what you'd want to see: a smaller company winning meaningful government contracts in a sector that's about to explode with funding, with the manufacturing partnerships and technical capabilities needed to scale rapidly. But here's where things get complicated and why I'm both excited and nervous about RCAT's prospects. Their revenue actually dropped from about $17.8 million to $7.3 million last year, which raises serious questions about their ability to convert these contract wins into sustainable revenue growth. This revenue decline happened during a period when they were supposedly winning contracts and building their business, which suggests either these contracts aren't generating the revenue investors expected, or there are operational challenges that are preventing them from executing effectively. They also had to raise $20 million in debt financing earlier this year, suggesting they're burning cash faster than they're generating it and need external funding to support their operations and growth initiatives. These are exactly the kinds of warning signs that make investing in small defense contractors risky, even when they're positioned in growing markets. The defense contracting business is notoriously challenging for smaller companies because it requires significant upfront investments in research and development, manufacturing capabilities, and compliance infrastructure before you see meaningful revenue. There's also often a long lag time between winning contracts and actually delivering products and collecting payments, which can create cash flow challenges for companies that don't have deep pockets. The biggest cloud hanging over RCAT right now is a securities class action lawsuit that alleges the company made materially false and misleading statements about their Army contract and production capabilities, and this legal challenge could significantly impact their ability to capitalize on the current market opportunity. Multiple law firms are pushing shareholders to join the lawsuit, and the case covers investors who bought shares over nearly a 3-year period, which suggests the allegations involve sustained issues rather than isolated incidents. This is particularly concerning because it directly questions their claims about the very contracts and capabilities that investors are betting on, and in the defense contracting world, credibility and trust are absolutely essential for winning future business. What's fascinating is that despite this legal overhang, the stock still surged on the Pentagon policy news, which suggests investors believe the market opportunity is so large that it outweighs the legal risks, at least in the short term. The timing is also interesting because the policy changes happened right as these legal challenges are ramping up, creating this weird dynamic where the company's long-term prospects look better than ever while their short-term legal situation creates significant uncertainty. If the lawsuit gets resolved favorably or reaches a reasonable settlement, that overhang disappears, and investors can focus purely on the business fundamentals and market opportunity. But if there's substance to the allegations about misleading production claims, it could seriously damage their credibility with government customers and make it much harder to win future contracts in what's becoming an increasingly competitive market. The defense industry places enormous emphasis on contractor reliability and transparency, and any perception that a company has been misleading about its capabilities can be devastating for future business prospects. RCAT's position is interesting because they're small enough to be agile and innovative, but have enough defense contracting experience to understand the market requirements and compliance standards. Their challenge is scaling quickly enough to capitalize on the opportunity while maintaining the quality and reliability standards that government customers demand. The partnership with Israel helps address the scaling challenge, but execution will be critical to prove they can deliver consistently at larger volumes. The technology requirements are also becoming more sophisticated, with increasing emphasis on artificial intelligence, autonomous operation, and integration with broader military systems, which means companies need to continuously invest in research and development to stay competitive. Looking ahead, RCAT is at one of those make-or-break moments where everything depends on execution over the next year or two, but the potential upside is massive if they can navigate their challenges successfully and capitalize on what might be a once-in-a-generation market opportunity. The successful execution of their Army Reconnaissance contract is absolutely critical. They need to prove they can deliver high-quality drones on schedule and within budget to establish credibility for future competitions and demonstrate that their technology actually works in real-world military applications. With billions in defense drone funding hitting the market and the Pentagon's new emphasis on rapid deployment and domestic manufacturing, RCAT could compete for contracts that dwarf their current revenue base and transform them from a small niche player into a major defense contractor. The emphasis on low-cost expendable drones actually plays to their strengths as a smaller company that can potentially move faster and more cost-effectively than larger defense contractors who are optimized for building expensive long-term platforms. Their partnership with Israel for manufacturing scale and their focus on domestic supply chains align perfectly with current defense priorities, and even their financial challenges could work in their favor if they can use this market opportunity to demonstrate rapid revenue growth and a clear path to profitability. What's particularly interesting about the current environment is that the Pentagon's policy changes suggest they're willing to work with smaller, more agile companies rather than just the traditional defense giants, which could benefit RCAT if they can prove their capabilities and reliability. RCAT's focus on reconnaissance and surveillance applications positions them well for the growing emphasis on battlefield intelligence and situational awareness, and their experience with different drone platforms gives them flexibility to adapt to changing mission requirements. The Pentagon's new approach to treating small drones as consumables also opens up possibilities for much larger volume orders than traditional defense contracts, which could provide the scale needed to achieve meaningful profitability. The drone market is at an inflection point where government spending, policy changes, and technological capabilities are all aligning to create unprecedented opportunities for companies that can execute effectively. RCAT has managed to position itself in the right place at the right time with meaningful government contracts and domestic manufacturing capabilities, but the question now is whether they can execute on this positioning while managing their legal and financial challenges. For investors willing to accept the execution risk and legal uncertainty, the potential rewards could be substantial if RCAT can successfully capitalize on what might be the biggest defense technology opportunity in decades. It's a high-risk, high-reward play in a sector that's undergoing massive transformation, with the potential for either spectacular success or significant disappointment, depending on how well management executes over the next couple of years. So if you liked the video and are generally interested in the latest updates about the potentially next big players of tomorrow, leave me a like and subscribe to the channel. Thanks, and hopefully I see you in the next video again.